And we're super excited to chat, man. I know we all have so
Yeah.
much in common that we do, but I'd love for you to kick us off with a little bit of background and intro, man. Tell the world what you do. I know damn near everybody knows you, man, and you're out there and ground pounding and everything, but maybe a little bit of background and talk about what all you're focused on.
Well, thank you. Well, look, I appreciate the time that we get together because we do share a couple of very important passions at the center of which is creating economic growth, creating jobs, creating businesses, and people forget the community banks that we serve and have the pleasure of affiliating with are some of the best small business operators on the planet. And so as a way of background, I laughingly tell bankers often when I'm out speaking that I'm an accidental banker. I was working my way through school. I contend, and you all have probably heard me say this before, if you asked a bunch of bankers in a room how many went to school to become a banker, almost no hands would go up.
Yeah, we're a bunch of
That
mutts, right? Yeah.
well, that we all got into it for a wide variety of reasons, and my hypothesis that I'm gonna continue testing every time I get a chance is that air conditioning is probably the common denominator that drove a lot of people out of landscaping jobs, out of road crew jobs, out of working at a outside at a pool as a lifeguard or whatever. That first teller job became available, and you could go inside and work in air conditioning. And
Oh,
and I personally have that in my background. In that again, working my way through school, my mother called me one December afternoon and said, and she was working in a bank, said, "Hey, there's a job opening in the bank that I think would be really good for you. The hours work with your school schedule and so forth." And she said, "And it's inside." Well, the punchline was I was working at the airport on the baggage ramp at the time outside, cold, wet December. I'm like, I'm going inside. So
yeah.
there became my entry into banking. And again, I woke up years later looking around going, wow, this is kind of cool. I like what I'm doing. So I had a chance, blessed to come into banking at a time when we had just amazing management training programs, got to do
Yes.
everything in the bank, learn it all, work in a very dynamic, high growth environment at the time, and ultimately put kind of my technology engineering educational aptitude around operations and technology and building things, and then ultimately it led me to leaving the banking and going and working in technology companies. And I've been incredibly blessed ever since to work with some amazing people, create some amazing companies, take some companies public, take some companies private, do corp dev, M&A, and end up at this really cool place at ICBA, the Independent Community Bankers of America, where they have they have said, let's create an environment where this intersection of technology and community banking can truly accelerate, that we can foster the growth at a time, and y'all have heard me say this, that the technology has never been more accessible and available to community banks of all sizes.
Man, you just said about three different things there. I love this stuff. So in the old days, they actually used to send you through all these different departments in the bank, and you learned all
Yep.
kinds of
Yeah.
stuff, which was
I was
fantastic.
a branch manager. I was a
Peter
branch
said,
manager. I did repo work.
yeah, man. Another thing you hit on there was, the fact of being what I would call a builder. You've actually
Yeah.
created some things and done some things. There's a lot of people that I think there's frustration. I actually was a call this morning with a core CEO, and they went off kind of ranting about, so many people haven't built anything, but they talk about it all the time. And it's like, I know that feeling when you hear people not know what they're talking about to some degree. And when you have people like you in here and Tanner and others that have actually done something, boy, what a benefit for the bankers to have access to people like you. The
Well,
other thing
look,
you
this
tapped into
is
quick is, and
well,
this is like one of the big things I wrote down I wanted to talk with you about is,
yeah.
man, we're at like this monumental moment where you just get this feeling that innovation is about to explode in a positive way for community banking. And there's not that many people doing it. Tanner, you want to kind of touch on
Yeah.
that?
Yeah.
I think it's a question for you, Charles. If you feel the same way, it's just I feel like we're at what is hopefully the end of a fairly negative kind of challenger. Remember when we talked about challengers and all, right? Like, I feel like some of that is kind of beginning to wind down and they're getting beat up and rightly so. And then you've got some great opportunities on other sides and some of the old walls are being knocked down and there's all kinds of new stuff that's like, man, I never even thought about that 6 months ago. And now there's three people doing it, right? There's just stuff popping up. Do you feel the same way?
I do, and I'll say this, and again, this is not to disparage a lot of the entrepreneurs and people that we work with on an everyday basis, but when and I'm old, so I'm old enough to have seen several cycles like this, and the most near term cycle, you know, we can call the .com era. We've had another variation on that theme when interest rates were zero, money was plentiful, falling off the trees. Venture capitalists and their analysts could just throw money at anybody with a cocktail napkin. So it was real easy coming out of the financial crisis, 0809 period, as this stuff started happening. For people to look at the banking industry as a very opportunistic place to go chasing with lots of ideas and lots of capital. And they were all following that same kind of classical, I'll just assign it to the West Coast Silicon Valley model of let's just acquire customers as fast as possible. We'll figure out profitability down the road. Well, guess what? The proverbial chickens come home to roost. We have a economic slowdown. We have interest rate changes. We have credit quality tighten up. We have money supplies tighten up. And the institutionals and sovereign LPs behind a lot of these funds needed to repatriate some of that money. And what we saw is there were more good ideas than good businesses and good business operators. So the shakeout has been happening. And what we're now kind of seeing, and you guys have been on the road like I have, and we're starting to see some green shoots again, if you will, of some new entrepreneurs who are now learning from what failed, just like we did post.com. We learned a lot. And starting to nibble away at some good opportunities in the banking space without having to follow that kind of Me Too challenger bank, neobank
Yes.
approach, right? Because look, I've used this tongue-in-cheek analogy out on the road when speaking to bankers. I said, look, you know, it was to the point where if I wanted to spin up a bank for left-handed pipe welders, I could probably have somebody throw money at me and I could do that in a matter of days. Yeah. Right. So I know. Right. So we had all that happen. And now I think we're getting, I like to say, you know, it's responsible innovation.
Yes.
And so to your question, yes, we're on the cusp of another wave of some responsible innovation, focusing, I think, and from what we do at the ICBA, it's very germane to the way we operate, focusing on real problems banks have, real issues banks have. And we like to say there's really only three levers you can play with. You're going to make them more competitive, more efficient, more profitable. CEP, which happens to be my initials, but that's kind of
just throwing that out there, man. Yeah, just saying, man. No, I think that's right on the money, man.
But this is what, man, you guys know this is what our bankers want to hear. What problems are bells and whistles and shiny objects aside? Help me be more competitive, more efficient, more profitable. And so there is a movement afoot that, as we've seen at some of the national shows and events, we're starting to see some entrepreneurs come back to reality with some very rational and responsible approaches to addressing those needs of our community banks.
Yeah, I talk a lot to people about, you know, on a scale of 1 to 10, there's also a 0 that gets overlooked, and that's banking. Banking is safety. Its number one goal is safety, not innovation. So if innovation was a 10 and safety is a 0, we need to learn how to innovate at 0. That's what we call it. You know, innovate at 0. If you can keep us safe and sound and do this the right way and innovate, now you got something. That takes a thinking person, you know, somebody to really understand the business not somebody fly by night, like you said, let's take an engineering guy from California and see how that works out in banking. Probably not too good. But I will give them this compliment that we had a guest on a couple of weeks ago, and he talked about, building on the peripheral. And so we see some positives, like, hey, there's no overdraft fee for the first $100, or you get, no fees on your brokerage charges and things. So they've seen some positive changes come throughout the industry, some from these peripheral players and what they do. So hats off to them on that. But what the future holds right now is really cool.
So I like to, and again, full disclaimer to my banker buddies out there and to my ICBA brethren, before I say this is Charles Potts speaking for Charles Potts. But going into banking, we have to remind ourselves, and our bankers know this, banking is about risk mitigation, not risk avoidance. If it was the risk avoidance business, they wouldn't exist, they wouldn't make loans. But it's about risk mitigation. And one of my trainers, my first week in management training, she said, Mr. Potts, your job is to say no, followed by no, followed by hell no, get out of my office, no. And I tell salespeople and entrepreneurs, their job is to eliminate the no's until you get to that yes, which is what banking has always been about. I want to make that loan to XYZ for this reason. How do I eliminate the no's so that I can get to a yes? I want to get to a yes. This is what our industry is all about. It's why they're the economic engine behind job growth and job creation, is because they want to get to a yes. It creates vibrancy in their communities and the people they serve. It creates generational wealth. It creates opportunities for jobs all around them and improve the quality of life for everybody. So getting to yes, eliminating the no's, is a big part of then when we look at the fintechs and the technology companies coming in to play with banks, how do we help them eliminate the no's so that they can be successful and ride hand in glove with our bankers going forward?
This is about me and Tanner were talking about earlier, is that there's a handful of people that are very good at this. And it's okay to call out names. Tanner, you're welcome to.
I'll call you out and I'll call Charles out. And I would say both of you being good examples of people that have spent a considerable different number of times on both sides, right? And so I have this weird, and Charles, maybe you hate me or maybe you agree with me here, but I feel bad for feeling this way. How about that? I don't think that it's bankers that have the answer on the technology side. And I've actually, while I respect a number of them that go out and really, try and transform and do things different, we've also seen a lot of mistakes get made, and we've seen that drag other bankers down with the occasional success. I don't think I think you said it well, Charles, I don't think it's the Bay Area, the technology only people, but there's a smaller group of people that we're all a part of and know well. And, Charles, we see everybody at AFT, right? It's a pretty small group, but it's badasses that have been on both sides for years and years. And you understand the technology and the banking, and it's a different kind of person that I think is really the solution architect to the future.
Man, well, to a large extent, part of, and this just with age goes wisdom, all those other trite sayings, so to speak, but to a large extent,
hang on. Did you hear that, Tanner? I hope you heard that.
Yeah, I did that for you, Dave. I did that. but to a large extent, part of our responsibility, and I see this as our responsibility to the tech entrepreneurs, is that helping them avoid the proverbial third rail, not touching the third rail, right? So if we can help shortcut their path to success by pointing out lessons learned and pitfalls to avoid, they're going to be more efficient and more successful at pursuing what they're doing. And translating that to the other side with the bankers in the same vein, how do we highlight best practices, best in class activities, so that the bankers themselves can avoid those same kind of pitfalls? And so that intersection that we create is critically important, because let's face it, the world is moving at a pace we've never seen before. It's flying fast and furious, and our bankers have to be equipped with not just the tools, but the knowledge and experience and insights on how to properly use those tools. And that's one of the big challenges we now face with aging bankers and a new workforce that's never stepped foot into bank, a new customer base that's never stepped foot into a bank, right? And that our bankers are going to have to contend with this whole new cultural shift that is moving at light speed. I mean, the fact is, I want what I want when I want it is the way everybody thinks nowadays, and we live at this intersection to help kind of mediate that, but also help make sense of it for our bankers.
Makes great sense. What I've been thinking about, guys, and I think I've narrowed this down to kind of three worlds now, but I really like what you're saying of the, 10 or 15 year ago kind of challenger fintech space, the neo space. And I was thinking this morning about, there's actually a couple of successes to point to there that are odd, right? So I was thinking about Robinhood. You might call that wealth management for the average person. And then I was thinking about Rocket Mortgage, Audi, right? And so there was a couple of successes, and I think that is a good analogy for all of us to look at why working these problems, Charles, and the work that we all put in and strive towards anyway, is important, that we don't get kind of out innovated on these edges, because there's clearly some greenfield there that outsiders were able to figure out. And
and Tanner, let me interrupt, because there's an important asterisk to that I find it's incredibly important for us to continue reminding our audiences. And yet, the whole community banking industry since the beginning of mankind has been built around specificity and unique communities. We did it with brick and mortar. We had banks that we were building in the 80s and 90s just for doctors and dentists. We had banks we were building just for veterinarian medicine. We have had bankers build bespoke, vertically oriented community banks since the beginning of time. They're communities. And the fact that we now have a community that sits in a digital experience doesn't change the fact that our bankers understand this. They understand that there is a community of unique left-handed pipe welders.
Yep.
Who want a community bank experience. Yep. So the community banking industry has that in its DNA. And what we've seen the last 10 or 15 years is just brand new entrants leapfrog the white space and leapfrog the brick and mortar physical, and do in a digital world what community banks have been doing since the beginning of time.
Yep. Albeit, and I think you said this well, largely funded by massive outside dollars and majorly unprofitable. I mean, if somebody came to me, and you guys will laugh at this, here's 10 million, 20 million bucks, go, lose 20 million bucks to bring me a company that does 1 million in revenue. I can bring you a broken lemonade stand.
I'll compare a community bank's CAC against some of these techno companies' CAC any day.
Okay. Yeah, I'm like, if you're wildly unprofitable.
For those listening, that's customer acquisition cost, just so we remind our audience.
It's funny, because you see some of those outside perspectives coming to bankers and like, you got to go after this or that. And it's like, after a gazillion thousand years, I think that they know what's profitable and what's profitable to attain, and especially in their communities.
Good friend of mine. Good friend of mine and I were talking about the fact that if you study every bank failure since the beginning of banking in the United States, you can find the 10 or 12 attributes that are common across all of them. And the good bankers know to avoid those things and what to do right. And the techno companies don't.
You got it. Well said. And they're spending other people's money to learn those lessons. And that's hard for the rest of us to compete with. Yes. Right? Let me ask you a question, man. So thinking about, we kind of hit the challenger era back then. And I think now I'm really focused on kind of the BaaS and embedded space, shifting over to what we would all think about as commercial clients, right? That's Walmart, Home Depot, the S&P 500 wants to have their banking offering, right? And we've got HEB here in Texas, and they have it's 5% off on their debit card and checking account on HEB products. And it really is interesting because it's like there's margin there for them in the groceries, so they offer great debit rewards. So let me just ask you this as blunt as I can. As a banker, is it a competitor or a customer, right? Or a partner? You see that kind of there's a really interesting conundrum there inside.
Frenemy. It's the
Yeah,
whole frenemy thing, right?
frenemy.
It's the whole look, it can be both, and bankers have to be very thoughtful about how they ring fence those relationships and what they're looking for and set real clear rules of engagement and expectations. But look, it's like how many in-store bank branches have we had in the Walmart physical footprint for the last 30 plus years?
You bet.
Right. So there's a lot of
2,700, I think, is the number.
yeah. Yeah, I
Yeah.
mean, there's a lot of history, there's a lot of knowledge, there's a lot of experience, and those banks and those bankers have to decide what do they want to be, what do they want out of it, and how do they put those rules of engagement together. But it just like we were talking about earlier, but it necessitates a very strong strategy, a very thoughtful strategy, a very clear strategy on the part of the banker, and arm themselves with the best knowledge and best best of breed solutions and the lessons learned from a wide variety of people. The beautiful thing about community banking is, God bless them, they'll talk to one another and share their insights and share their experiences. And so that knowledge is there. And that's part of our opportunity and responsibility, is to help link some of that together so that we can provide our bankers with not only the innovative technology and solutions, but the knowledge. And that's the education arm of ICBA helps with a lot of that as well. But it's something I've been preaching a long time, and especially since I took on this role. You got to have a clear strategy, a clear goal and objective, a clear direction. The quote from Alice in Wonderland as she meets the Cheshire Cat, fork in the road, wondering where to go. And he says, "My dear Alice, any road will get you there if you don't know where you're going." Okay, so this is what our bankers have to deal with. Where are they going? What do they want to do? And then how do they put that together properly so the friend, foe, enemy thing is properly established?
That's perfect. There's a new era right now of you don't have your tech people get up and walk out of the room when you sit down and have a strategic planning meeting. It's all the same thing now. And when we have that collective put together, and this is so important that, we talk, maybe there's 4 really good players in this market. Also Canopy and Jam, you guys, BHB, Bankers Helping Bankers in there, that these are pretty niche players that are experts at, I don't want to say picking a winner, but understanding the company, what the company's trying to achieve, their ability to achieve that. I don't like, total addressable market. I like total attainable market, right? I want to know the distribution path. Is it there? Can we help them get there? And back to your point of collaborating and talking with the bankers, I'm not trying to sell anybody a damn thing. I don't want to sell anybody anything, even our stuff. I just want people to understand that it's a communication area that we're trying to create, because there are innovative bankers out there.
Well, we
space that are very good.
We like to point out that with pick the number wherever you draw the line, the 4,200, 4,300 community banks in the United States, they're all snowflakes. They're all different, yet there's still snow, right? So there's still snow. So there's some commonality there, but they all have some differences, and we need to arm them with choice. The same reason they exist. If I'm starting a new business in Southwest Georgia, I need to have choice on how I'm going to bank. And I want to know that there's multiple options in community banks with different skill sets and resources to serve my needs. The bankers have the same needs. Again, they're a small business. a very unique small business. So there's no one size fits all solution provider that's going to go in and say, I answer the needs of all 4,300 community banks. So part of our challenge, and again, I think I take it on as a huge responsibility, is to make sure we identify options and choice. And that's the real evolution of technology in banking.
Perfect.
Right. The fact that a bank of any size can go build their own best in class, best of breed solution to fit their needs and not take the historical one size fits all approach that the traditional technology providers have forced upon them.
If we don't do it that way, I mean, we'll have 4 or 5 or maybe 100 banks left in the country. I mean, that's not good for anybody. And I hope everybody can see that. And I challenge you to help me, or at least get the son of a bitch off me, the next person that says we have too many community banks.
I
rhetorical would be, well, what's the number?
God bless my peers and my team in Washington, D.C. They do some amazing work, and they are heroes to community banks. I cannot I can't stress enough that fight we continue to make sure we have a strong, vibrant, safe, and sound community banking system. Because look, I go back to what I've said over and over again. Community banks are the economic engine for job growth. Almost 2/3 of all small business loans come from community banks. 80% of ag loans come from community banks. Community banks are creating jobs all over this country, and without them, job growth is strangled. Economic development is strangled, and we have to continue making sure we arm them with the tools, services, solutions, education, knowledge, resources to make sure they continue to support the communities they serve and power what is, really the fabric of our society, and that's small business America.
That's it. You got to own it if you're a banker. There's no way that we're going to survive if we don't show bankers how to make more money. I mean, that's the bottom line to all of this. I don't think that merging 2 banks together to get scale is going to prevent Chase or B of A or somebody from whipping your ass. You're going to be able to outsmart them, out innovate them, out niche market them.
You can definitely
use technology to do it. Say again.
You can outmaneuver them. You can move faster than them, more nimbly than them. And here's the beauty of our community bankers: you can get to the decision maker in the blink of an eye.
We had a CEO of a bank last week was talking to us, and he said that the customer had said, well, tell me the big difference between your bank and this other bank. And he said, I'll give you my cell phone number. And he just stopped right there, and I thought, well, that pretty well said enough.
Man, that says it right. We had a company we were working with post SVB who had had some challenges, and one of the interviews they did was they highlighted the fact that they were moving some of their banking relationships to a community bank because the bank CEO gave them the phone number and said, here, let's do business together. You can get to me. They still haven't gotten a phone call back from SVB.
Well, if you look at a lot of, this is something that always shocked me with the kind of nasty bank commentary from the sort of challenger fintech space. Like, you're a startup and you're an entrepreneur and you pride yourself on being nimble and new and differentiated and all these things. And it's like, you're kind of describing a community banker, right? Like, you're serving a community you really care about, right? You're doing things differently. You're nimble and you're better than the big guys. And yet you're trying to compete with these folks. I think you're telling yourself a story so you can sleep better at night, right?
The average community bank, that literally had this conversation 2 days ago. The average community bank is 104 years old.
Mm-hmm.
Okay, so tell me that a startup technology company with about 18 months under their belt understands what they're talking about.
Well said.
But I think also there's a positive in some of this too, that maybe they had an idea, maybe they had 12 ideas, but one of them is something we can incorporate, stealing other people's idea. Right. We like to call that innovation, right?
Yeah. Look, there's plenty of opportunity for those companies. Again, we want responsible innovation. We want responsible regulation. We want this stuff to be responsible. And that's again a big opportunity we have collectively to make sure we're helping coach, mentor, and nurture these technology entrepreneurs.
Well said. Charles, I want to give you a minute or two, man. Final thoughts. Anything that's on your mind, anything we all need to be working better at?
Look, the economy is clearly on top of mind for all of our bankers and our society as a whole. I'm very optimistic about the opportunities for our community banks going into 2025. I'm very optimistic about the opportunities for the fintechs and the technology entrepreneurs we're working with. I would say this: if you want to help improve our society, you want to help improve the quality of life in the United States, help build a business with community banks in the communities you serve. The best metric I think anybody could take away is not how much software they sold, but how many jobs they create. And that's what I want to see a lot of these companies and a lot of these opportunities we're working on really focus on in 2025. How are we going to continue to strengthen our communities, and job growth and job creation is at the center of that.
I love it, man. You've got a moment in time where almost everybody can work from home these days. And communities, small communities, are usually a lot cheaper than the big city, a lot more fun to live in. Yeah, you can go to church with a guy who's also their son pitches on the baseball team. You can hang out and have real community interaction with people and support local. At the same time, when we got that level of power and intellect moving to these communities, business creation everywhere. We just need the right environment. And I think we're getting there, in banking. We just did inside the numbers earlier. And, it looks like, hey, things are starting to look up a little bit. So I think we're maybe
I'm bullish on 2025. I think 2025 is going to be, one of those inflection points in our banking technology evolution, all for the positive.
But on our racing shoes, let's go.
There you go.
All right, Charles, you're awesome, man. Thank you
appreciate you guys.
You do. Hats off to you.
Always.
We appreciate you coming on the show, man. We'll catch you next time.
Likewise. Look, and y'all kill it next week at the roundup, man.
Hey, come see us, man. We'll have a beer.
Well, we'll definitely block it in for next year. I got too many speaking engagements.
I get it.
All right.
I get it. All right, man. We'll see you later.
Guys.
We'll see you.
Cheers. Bye-bye. Bye-bye.